right, traders, let's talk about one of the most important and most overlooked aspects of this game, trading psychology. You can have the best indicators, the most dialed in strategy, and even piece of news at your fingertips, but if your emotions aren't under control, you're toast. Your
Toast.
mindset is what separates the consistent traders from the gamblers, so stay tuned as we break this down.
Welcome to Beyond the Trade, where the levels don't lie, the trades hit hard, and we're here to cut through the noise. No scripts, no safety nets, just raw market talk. Lock in. It's time to go beyond the trade.
Beyond the Trade is for educational entertainment purposes only. Nothing you hear should be taken as financial advice. Always do your own research and consult a qualified professional before making investment decisions. Adam.
My guy. Let's talk about some trading psychology.
Yes, sir. I put together some stuff, and I know that there's a lot of people that struggle out there. So I wanted to just try to go through this fairly quick and just get some insight on what trading psychology really is. It's probably the most important aspect of trading, period. 5 key things. First up is discipline. Discipline is doing what your plan says to do. I mean, there's no doubt about it. No matter how you feel, that means that if your stop loss hits, you take it. No negotiating. No maybe it'll bounce. You have to trust your plan, not your emotions. Next is patience. Most traders lose money because they trade too much. I mean, they get in way bigger than they should. They want action every day, but truth is the money is made by waiting for your setup. The next thing is emotional control. This is a tough one for a lot of people, including myself. Fear, greed, revenge trading, these end up just eating your account alive. Fear will keep you from pulling the trigger sometimes. I mean, I've had that happen where I see the setup and it's perfect and my fear keeps me from getting in. Then you get the greed end of it that you end up holding trades too long, start revenge trading. So emotional control is pretty key. The other one is confidence, but confidence without ego. Your confidence is going to come from your preparation, experience, comes from time spent understanding the market. You test your plan, you know your stats, and you trust the probabilities, but the moment ego kicks in, you stop listening to the market and start trying to prove you're right. God, I've done that so many times. I can't be wrong again.
Preach. Preach.
And then, of course, adaptability. The market's changed. We've been lucky. We've been in an up market for a long time right now. But when the conditions shift, there's going to be a lot of people that aren't prepared for it. But you have to be able to adapt to the market change. Number one that I would say is you got to keep a trading journal. If you don't, start one tomorrow, Monday morning. Write down why you took a trade, write down your entries, but more importantly, probably write down what you were feeling, what you saw, what the outcome was of that trade when it's over. And in a week's time, a month's time, you're going to start to see patterns that you probably didn't even realize were there. And I've done that. I put that off for so long and started doing it this year. I didn't start doing it at the first of the year, but it was probably by February. And I can go back and see good days, bad days, and they almost repeat. And a lot of it has to do with where your mind is, you know. Athletes don't just show up at a game, you know, when the whistle blows to start playing. They're there hours ahead of time getting their head straight, getting ready for the game. And it's kind of the same thing with trading. I mean, we have to, if you're waking up at 9:25, logging in your account and taking trades at 9:30, my God, what are you doing?
Particularly day trades. If you're doing something on a short coil or you're trading weeklies, I mean, preparation is an absolute must.
Absolutely. I mean, it's true, and I've heard this 100 times that trading is 20% strategy, 80% psychology. And I would almost say it's 90% psychology.
Yeah, I'd say more. I'd say more for sure.
Yeah.
Well, I mean, let's take it top to bottom. I think let's start with your first one. What was the first one that you said?
First one is being disciplined.
I mean, that is potentially the biggest one. I know they're all big, but if you have just like you said, if you have a stop loss, if you have an idea of what you're willing to risk, then you must stick to that because you have to acknowledge that these are your rules and you will follow them. And it's kind of like what trading in the zone says. So you
Yep.
acknowledge the importance of these rules and therefore you never break them. And we talked to our good friend. We did our 1 hour. I don't know, not counseling,
Yeah,
Q&A,
yeah,
kind of a
yeah.
one-on-one, two-on-one session with 1010 Trades, a longtime follower, which was such a blessing. We did a
Gosh,
give.
great guy.
Yeah, yes,
Great
just
guy.
awesome guy. And a great day of celebration for him and profit for him. So stay tuned. We're happy to do more giveaways of our time. I mean, it costs nothing to us, and we love to do it. So follow along and stay along for the ride. I know we're along for Yash's ride. Shoot, maybe we bring him on here.
Yeah, we'd
That
get
would,
him on as a guest talker. And the guy's interesting. He's seen it all in the market, and he's done very, very well.
but like I was talking about with him just a second ago, he asked us how much of he said, "Here's my portfolio. How much of this should I allocate to options?" And I think where discipline comes in is you kind of need to math into that. So say you have a
Yeah.
$10,000 portfolio, for example. I would say this is what I told Yash. I said for his number, I said take or if you have $100,000 portfolio, right? I would say only take up to $1,000 for a single options position. I would say probably go a month out so that you have time. And if you're easing back into options, that was kind of our talk, easing back into options. If you have a $100,000 portfolio, you only use up to $1,000 for a position. Therefore, your position size for that trade is only 1%. And then you keep
Hmm.
yourself at a hard 20% stop or 15,
Yes.
just something that's not too much of a hurdle to get back. Therefore, if you have a hard 20% stop on 1% of your portfolio, the most of your entire portfolio that you can lose is 0.2%. So
Right.
having that math and that discipline and understanding the importance of those rules is key. Is key. Any for any trading, right? If you're gonna be wrong, you're gonna be right. We can't call tops, we can't call bottoms. I mean, a lot of people thought we were gonna struggle here, over the last couple of weeks. But the market, as you can see on the screen, has recovered, and futures are up about 1% right now. So, market has recovered well. We may continue to go up for a very long time. Again, I think we're still in the fifth or sixth inning here, probably sixth. Um,
Yeah, we've been waiting for months for the bottom to fall out, and
Not
got
happening.
actually a year we've been waiting for it.
Yeah. So discipline on your stop losses, I think, is huge, and there should be no emotion there. Acro, talk some more about your stop loss strategy.
Yeah, I know when I first started getting into options, the big number being thrown around was 15%, and I think at the time, not having the experience, I was probably not always entering at the greatest spot. So 15% was hard for me because I could be down that in a matter of minutes. But through learning and some trial and error, I set my stop at 20%. And these are on well versed plays, companies I know that I've been watching. I see the levels, I have levels, and occasionally, depending on the stock and what's going on with the market, I might give it an extra 5%, but that's it. So I can say without doubt, excuse me, that I don't think I've had one loss this year for more than 25%. No, I take
Beautiful.
that back. I have. I've had a couple of them, but they're ones where what did I do? I had no discipline. I completely blew my rules away and thought I knew more than the market, and they bite you and they bite you hard. So yeah, I set that rule, and I mean I'm 99% of the time sticking to that percentage loss rule.
And we were also, I love that take from you, Acro. We were also talking about stop losses on commons positions, and he was talking about maybe a 2 or 3% stop. And to me, I say you gotta know the kind of stock that you're trading. For example, if it's APLD, that thing may swing it may pull a 10% swing within a certain day, right? So, and you should allocate your position sizing based on that. And so, for example, if APLD is a more volatile play, maybe you're taking a smaller position size, therefore allowing your risk to be more of that position, right? If giving yourself a little bit of breathing room. And I also said for a position for a stock like this, and additionally NVTS, which I've been all over, scaling in can be a good thing. You don't need to be 100% in, 100% in, 100% out. Take some time to accumulate a position, especially even if you like it a lot. Take some time. So, 20%.
See, for me, most of my commons, any of the shares I'm buying are typically not long term. They're swing trades, day trades. So you have to really take into consideration what you're doing with those when you buy them, what your goal is or your plan is. Because, like you said, a 1 or 2% swing on them, man, that seems so tight to me. But I'm used to day trading and option trading that doesn't even compute much with me.
Mm-hmm.
Does that make sense?
Yeah, yeah, yes, totally, totally. It's a completely different kind of game. But I wanted to touch on both, just because I know we've got different listeners. What was the second one?
Second one was Patience. I knew a girl named Patience once.
Really?
She wasn't very patient.
Really? Wow.
No, not at all. But yeah, patience is, wait for your setup. Just because something's moving, and if you don't have any of your indicators are telling you that it should be moving, or it's not aligning with your levels, be patient. Wait for something to give you the sign. And I'm kind of a firm believer in having at least two indicators that I'm following. When they come into alignment, then it's game on for me. But when I don't wait for those and I'm going, oh, shoot, this is going up and I just want to get in, it usually doesn't take much more than a few minutes before it reverses and it's going completely the other way.
Yep.
So patience is really, really key. It really is. It's another big one. If you don't have no setup, no trade.
Yeah, I mean, another thing that we talked a lot about on the call and that I want to continue to harp on is, and I'll go back to APLD just because I've been talking about it for a while, but patience is not buying the breakout candles. It's buying the pullbacks, okay? You see here on APLD, patience is not buying the September 22nd candle that goes from 20 to 25. It's waiting for it to come back down to the base of where the breakout was at 21. And you know what? If it never comes down to the base and you miss it, there's always another trade. But the same thing happens here in the beginning of October. APLD breaks out to about 28, comes back down to revisit and fill that gap at 25. You can buy it again.
Mm-hmm. Yep.
And then the same thing happens here. APLD has great earnings, great news. It has a hard time getting over 40. It does briefly intraday for a few days, but then down on Wednesday of this past week, there's a gap that came from earnings, and it was filled down to 30. Patience is waiting for the pullback and not buying the breakout, because a lot of people are just spam buying the breakout, but that's going to get disconnected from your EMAs. You're gonna be buying something that it could go down a lot. That's the thing. That's why I would caution people on NVTS is when something breaks out 100%. If there's a bad news day that comes out for NVTS or tariffs, this thing is probably going to go down 20%. It's just because there's such a low volume area. I would, if I see this, I love the stock. I'm still waiting for probably a bigger pullback here into the 10s.
What's the volume on that one daily?
NVTS. Average volume is 58 million.
That's pretty good.
I mean, 30-day, and 30-day includes days that had 150, 120. So it's a little bit skewed, but these other ones were about 20, low 20s.
Okay.
in the build up. So patience to me is waiting for the pullback. You know it's going to happen. I've talked about this for my entire trading, teaching career. You wait for an old resistance to become a support. And shoot, you could even wait to see if it works. And if it doesn't work, don't buy. Wait for an old resistance to become a support, and then you buy. And you know that, and when you have that, for example, your risk level is so much lower, right? Because you can just put it below that support. If you're buying close to the support that was an old resistance, you can just put your stop loss right below that support, and it's probably only 2 to 3%. That's kind of what I said. It's your margin of error is smaller, but it's a key level, so it matters. Hopefully that all made sense. I kind of just went on a tangent there.
No, it did. It makes perfect sense. Our next one's emotional control.
Yeah.
We've all, I don't know anybody in my life that does not struggle with emotional control. You know, it's fear, greed, and revenge. And in trading, wow. Fear, like I said, fear is going to keep you from pulling the trigger. You're scared to death to get in, and you even though the signs are there, your support level's there, your EMAs are where you want them to be, your RSI, everything, all those things are lining up, telling you it's going to go, but your emotions are giving you fear, and you don't get in, and you end up kicking yourself for the rest of the week. Greed is the other one. You see a move, you do get in, and you don't get out. You stay too long. I mean, that's one that I still struggle with. I think I've done so good in so many things, but I always see more. There's more in it. And I have learned and got better where I think we were talking about this early today with Yash was, if I'm trading, for example, 10 contracts, so when I get 20%, I'm looking to get rid of 2-3 contracts out of 10.
Yep.
It hits 30%, I'm going to get rid of the other 2, and at that point, I'm half out. What I do with the other half will depend. It depends on what's going on with that stock. If it's still going straight up, I'm going to hold on to them, but I'll typically get to a point where I've got 2 or 3 contracts left that I just leave as runners, and at that point is when I set my stop, and I let it do whatever it's going to do. And the good days are the ones where every 5 minutes you're upping your stop because the thing keeps going.
Yeah, and you're setting that stop at a place where you're comfortable.
Mm-hmm.
I've
had runners outdo my entire trade.
Exactly.
Two contracts outdo 8 that I got rid of prior to that at good margin.
I mean, that is that's why me and you doing this together is such a perfect complement, because you have obviously I've traded options a lot in the past. You're doing it more right now, and you're doing it the perfect way. So props to you.
That's good to hear.
I
Coming
love
from
it.
you, I take that as a compliment. I love you, man.
I love you too, man. This is such a we need like a soundboard that can go. But this is, and you get both sides of it, and I think that's why I love doing this. But regardless, the emotions part. It's, for me, emotions mean making a bad decision, right? If you make a bad decision, which we're all going to make a bad decision, we all have our rules, right? And eventually, someday, you're going to break it, okay? You're going to break your rules, and you're probably going to be upset about it, okay? That's where the emotions start to kick in. Say you take, and we've all been here, say you take your 20% loss on your option, or your 5% loss on your APLD common shares, and then as soon as you sell, it starts to fly. Everybody, been
in that many times.
As soon as you sell, it's almost like they did it to you.
Yep. It gets personal.
You feel like the market has personally attacked you. And you know
Who's
what?
watching me? Who is logged into my account and knows exactly what I'm doing and forces me to do this nonsense?
My FBI agent. has told them that I have sold NVTS, so they want to rip it. But
Now rip it. Yep.
so how do you deal with that? Okay. There is no perfect way, and I know you want to say something. For me, personally, it's honestly, you could delete your trading apps. That's one way to do it. Because at that point it comes to preservation of capital. Don't everybody gets emotional at some point, especially if you haven't traded, if you haven't been through it before. I say turn the apps off, delete the apps, go for a walk, go stretch, do some sort of physical activity to get your mind off of it.
Bingo.
Sleep, but it really is go get in motion, go do something. And that's also important. If you're holding stocks and you're thinking about stocks all the time, stocks are kind of like that dopamine hit that you get first thing in the morning. Some
Yep.
kids, people, all of our ages pick up their phone and scroll TikTok first thing in the morning. Me personally, I pick up my phone, I check my portfolio in the morning, right? Who doesn't do that? Who check the pre-market levels for my stocks? Even putting
If you
that
don't
off.
do that, you're some kind of a weirdo.
But it becomes habitual, right? And it becomes like an obsession. And I think if you make a bad decision, or if you have a bad trade, or if you start to feel emotional about it, you need to force yourself to put it away. Stocks have ups, they have downs, right? For example, I had a sizable core weave position, and I started buying pretty much the entire way down from earnings from August 14th all the way through September 8th, pretty much. I was buying at 120, I was buying at 110, I was buying at 90, and I said, this thing better go up eventually. and then, these days right here, I was actually traveling, and I kept looking at my phone. It was totally bumming out my travel. And I just said, I'm not even looking at it. Not even looking at it, because it technically broke recent lows on September 8th. I said, I am not going to look at it. I'm going to turn it off, which you can do this for common shares if you.
Wow, what a great double bottom setup that was.
I know. And it little bit of a liquidity grab there, and then a ripper. So
Man.
I'm not telling people who are doing options to just throw your screen away and hope it works out. That's not what I'm trying to say.
Yeah. I think when you notice and you know that emotions are getting involved, that's when it's time to just turn the computer off, walk away, don't come back to it today, or stay away as long as you can for the day. If it's morning and okay, maybe log back in the afternoon, but I still would advise against that. Stay away from it.
Yep. Turn it off. And if you're confident in it, you know what you own, you know your risk, have a stop set, turn it off. Turn it off. Don't look at it. That's my spiel.
Yep, I agree.
Don't have it on your computer where you have Trading View up on the top up here where it shows the price. We all do it. I know some of you do it. And just be doing other stuff and constantly checking that price. Don't do it.
Looking out of the corner of your eye.
I do it, and I know other people probably do too. Okay. Next one.
The next one is confidence without ego.
Oof.
That's important. Without ego.
Give me your thoughts.
I love this one the most because when it hits, you know it hits. When that confidence level comes up, you're sitting there looking at your screen. And again, I trade a lot with RSI, the orb, those kind of indicators. And when they all start coming into alignment, it's like the lights get brighter, the sounds start to go down, and you're just ready to place that big trade. And you're not even questioning it. You know it's going to go up. Those days are the best feeling in the world. But if you add ego into it and you go 4 times your normal size because you think you're that confident, or you're holding too long, that will kill it. But confidence to me it's an important one. It's a big one. And there's no better feeling when you have the confidence in a trade.
Yeah, I think where this could really be an issue is where you believe, quote, air quotes, believe in a position very strongly, and then you say, I don't even need a stop loss. I know what this is
Yeah,
doing.
that's ego kicking in there.
Or you have a trade that you have designated. There's always a purpose for every trade, kind of like we talked about earlier. Every trade has a purpose, and therefore, if you choose that something is going to be a day trade, you will not carry it overnight, right? Whenever you
Hmm.
dictate that you're doing this for an intraday move, that doesn't mean that if it goes against you, you're going to carry it overnight. I've made that mistake a trillion times.
Oh yeah, yeah,
And I say, well, I still believe in the move. You really need, I mean, because truly anything can happen in the stock market, and your ego is kicking in when you think that you know you can just go back, renege on your trade plan, because truly anything can happen overnight. I
yeah.
mean,
And that's when you stop listening what the market's telling you.
yeah,
It's
like
showing you that okay, the glory part of this trade may have been over. Time to start scaling out. Get out of it. Close it. There's always tomorrow. But the ego kicks in, and we start ignoring the signs that are there because we
you,
always know better.
yeah, well, we do. I mean, and I can't emphasize enough. I probably said it 30 times on this podcast. Anything could happen. I mean, anything. So, I mean, you're in a trade, and then you're in Tesla calls, and Tesla looks more bullish than ever, and the chart's probably going to break out, and pre-market is up 5%, and then they announce they cut prices on their cars. I mean, I'm telling you, this stuff happens. I've been a part of it, so be careful.
Yeah. Yeah. Last one in that was adaptability, being able to change with the market. And I mean, that's one that probably a lot of people are going to struggle with when it happens because we really haven't had a big change in the market in a long time. And people get complacent and comfortable.
Yeah, I mean, I think nowadays, and I've been thinking about this. What is my plan when if the market were to take a little dip here? How can I day trade commons to make it to make some good moves? And I assume that I think there's bear ETFs right on pretty much everything now. Yeah,
Yeah, there's yeah,
TLSQ is Tesla 2x short, right? Obviously, this looks terrible. I guess they did a reverse split. Um, but, you know, you can day trade these.
yeah, you can.
I've thought about it, but I probably wouldn't trade options on these. But just remember with any leveraged product or inverse product, just please understand the math behind them, especially leverage products. I be very careful because they decay over time. I mean, for example, you have Success, which is this is a good one to play if you're bearish, a 3x bearish semiconductor one. Obviously, it goes down forever. Probably going to do a reverse split, but it's because if something, it's just the volatility. If something goes down 3% and then it goes up 3%, it's net lower, right?
Right.
So, um, adaptability for me is just thinking about the next move if there ever is one, if there is one, but always really keeping my eyes open for what's happening and understand that the market could take a new turn at any time, right? Just because things are happy go lucky right now doesn't mean that it's going to be that tomorrow, right? Just being ready is kind of where I would
And
go.
that's honestly what's so attractive about option trading to me is I can play the market either way and make money.
Yep.
You know,
Yes.
market's going up, easy, make buying calls, market's going down, I buy puts, and I have the opportunity to make money every day. But you have to be able to adapt. I mean, you have to recognize when there's a big change in the market and your strategy needs to change.
Yep. Yep. And that could happen any day. So a lot of
Yeah.
these small caps are running. I mean, you look at the Russell 2000. The Russell 2000 is hitting all time highs. Probably will um, on Monday, and they could all be. I mean, all these small caps are ripping. You see on my list, I've got a bunch of sub $5 billion companies not playing. The Mag 7 here. There are some days that, and it's going to come, that they'll go down 20% in one day, all of them. So
Hmm.
being ready for that, knowing that that could happen, and having your stop loss and your risk defined.
There you go. You heard it from the goat.
Oh man, is that all of our?
Yeah, that was it from that section. In then we're into how do you strengthen your trading psychology, and I'll go through them quickly. Was keep a trading journal. I know
Mm-hmm.
some people do, some people don't. I think it's a great idea because you will see patterns if you're making notes on everything that's going on throughout the day. When you got in, when you got out, how much did you make? What were you thinking? What was the mood that day? Were you sidetracked because you had a report that you were working on as well for your real job or whatever? I mean, you really need to track it because you will see patterns develop. Number two was use strict risk management, and that comes into your stops. Set your stops, set those rules, stay with them. Create a pre-trade routine. That's not waking up at 9:25 and turning on your computer and making a trade at 9:31. I mean, what do you
Mm-hmm.
know at that point about the market, right? Accept losses as part of the game, and then take breaks. Don't trade angry. Take time away. Any of those you want to comment on?
Yeah, I mean, preparation is key. I say doing research and being educated on any trade that you're taking. Know all the news about the company. If you're about to trade, UiPath, I would at least know about, has there been any recent news? Has there been any recent, especially with smaller companies that we're talking about, or companies that have switched strategic plans, like a lot of these Bitcoin miners? Understand recent agreements that have happened, recent earnings, short interest. I would say just being educated is something that can improve your emotions, because
Mm-hmm.
when you feel like you know what you hold, or what your plan is, it needs to just be very dictated. It needs to be set in stone. When you feel like you know what you hold, it also gives you that confidence, but without ego. Like I
Yeah, and
love,
guys, like we've said, I think every podcast, Chat GPT is your friend. You go to Chat GPT and type in, "Tell me about the ticker PATH." Give me all the news. Show me the financials. It'll give you all of it in one spot.
yeah, it's truly. I mean, I've used ChatGPT ever since it came out, and it's funny because I was in a room. I was at some conference this past week, and I was in a room. They were talking about AI. Okay, and it's
Shock.
all yeah, I know, it's all different age people, right? And so the guy on the stage asked. He said, "Hey, um, how many of you used ChatGPT a year ago today? Raise your hand." And I'd say about 20%, maybe less, of the people raised their hands. And then he said, "How many of you have used ChatGPT in the past month?" And pretty much everyone raised their hands. I found
Mm-hmm.
that unbelievable.
Yeah.
Only 20% of people in a large room used ChatGPT a year ago. I mean, it's crazy. People, I've been using, like you've been using it too. You create so
Yeah.
much stuff and it's just awesome using ChatGPT, and
I'm thinking a
that's
year ago I was asking it like stupid questions to see what it would say.
well,
I didn't have a purpose for it, but I sure do now.
now the power of it is just unbelievable. And I've
Yeah.
told so many people this, and I'm probably going to preach this for the rest of my life, but you can understand everything about Path or Lays or APLD in just a short conversation with an AI,
Yep.
and it truly opens up the world. You don't need to read through SEC files. You don't need to look at who owns it. You can quite literally ask ChatGPT for all of that. Make sure it checks its work. Put it on the thinking mode maybe to
Yeah.
make sure it takes a while, but it becomes so easy to
Yeah.
just understand.
And the beauty of it is if something comes up during your search that you don't understand, or you like, what does that mean? Ask it. It'll tell you.
I mean, I remember learning all of the trading terms and anything within finance, and you have to look it up yourself, or you end up on a forum somewhere, or maybe Reddit, and right? I mean, yeah, it's the
You start throwing out your new technology or your new understanding of words like rug pulls and
yes, it's just all at your fingertips. Don't get rugged. Um, but anyways, there's a lot out there. There's a lot of tools that you can use. We've detailed some tools in a past episode. Um, Acro, what else? Anything else that you say is key for preparations to keep your emotions in check?
I think we covered it. You got to go. If something happened the night before, your girlfriend broke up with you, or
This is a good
you
one.
had a car accident, or somebody stole your car last night. I mean, stay away from the market.
You must have some PTSD.
Those all happened yesterday. Actually, no, I was kidding.
Please no.
But I mean, your mind's not going to be in it. You're not going to be able to concentrate. If you're not able to concentrate, you shouldn't be throwing your money out there. My
Yeah.
opinion.
Yep. I think anything that messes with your mental space, whether it's something at work, whether it's a relationship, whether it's a child, being sick or very little sleep is also a good one. Distraction, it puts you in the wrong mindset, and it goes back to our first thing we talked about, discipline. Having that discipline is very much key for really feeling prepared and
Yeah.
emotionally in the right place for trading.
Master your emotions. That's what I would say. Learn it. Learn when you're starting to feel a certain way, and if you journal it, I guarantee you'll see a pattern. Not just in trading, in other things of your life as well.
Yeah, I love it.
But all right,
Now,
I think we beat that one pretty well to death. Unless you got something you'd like to add about
no, Acro, I
trading
wanna,
psychology.
I wanna, I wanna start a new segment.
Okay.
I want to start a new segment. It's called Sunday Bangers.
Sunday bangers.
Sunday Bangers, everybody. All right, let's celebrate some winners. Okay. First off, this one right here. We talked about it on Twitter. Please check the pinned tweet on my Twitter, Adam Sliver Trade. There's a Google Doc there, and I keep all of my education there, including my current stock picks. Okay? So if you want to see what I like, it's going to be detailed there. I'll have a link to the tweet. I tweet about it too. So
You
there's,
can't buy that kind of information
I mean,
because
you can't
giving it
because
for free. But
it's free 99, baby. It's free out there. And education. I'm taking what I learned from ChatGPT and my own research, and putting it out there for everyone to see. So this one
I love it. I
has been a
absolutely
great
love it.
one. Acro's in it. This one, I believe, is going to. I'm not going to get too deep into it. These are fast takes. A lot of volume on the weekly on LAES. This is a quantum computing chip stock. It is looking quite good here. A lot of volume on this candle. Raced up from fives up to over seven. I would be careful here because it might open high. You may find a new support at around 760, but beware, the recent highs are in the 11s. Next one, Path. Talked about Path for a while. I've had a few updates. I think there's been a long term head and shoulders starting from July 24. Path finally sustained a move higher and closed the day a few weeks ago over 18. It's come back down and it's based over. It broke down below 15 during one day, and it's based, and now it's seeing some good accumulation volume. I see this as a Sunday banger.
Here's a Sunday banger.
Could easily go to 21. This is not financial advice, but I think there's totally space to 21. You're going to have some bag holders in the 25 area, but I think there's some pretty solid looking upside here. About 30% of meat on the bone here on Path. And keep in mind, this is only a $10 billion company. This has been public for a long time, IPO'd at about 5x what it is right now. I've heard that this is a takeover target. I think somebody probably buys Path. Look at all the volume here. Highest volume month in history. I think that somebody acquires this. We'll come back to this episode later when somebody does, and I'll tell you I told you so.
Yeah, we should probably get these all up in a Beyond the Trade Pod X post. The stocks that we mentioned. Keep it up there at the top so we can go back and brag, or go back in our tails between our legs. But I don't see that happening.
Humble brag. Humble brag.
Humble brag.
Next one, Poet, Poet. There's been a ton of flow on this one. A lot of flow. Look at this volume. I mean, highest volume. This is the same exact strategy that I took on NVTS. Follow the volume. It's not really moving all that much. There's a lot of people selling in the 12s, but look at that stinking volume. And that's not even from earnings. Earnings is on November 12th. This is just volume out of nowhere. It's because somebody's investing. They've got a major $75 million equity deal. I actually am seeing that they just raised money in a direct offering, an oversubscribed direct offering of $250 million worth of shares. I think the average price probably ends up around $725 there, which is not the greatest, but they needed working capital and for R&D, so it puts a ton of money on their balance sheet. So bullish, but in the short term, there may be an issue. Or not an issue, but it might be just a little bit of a delay to the ripper. Last one, NVTS. We all know that this was a killer call. You're welcome. We talked about ego. I promise I don't have that. Here we go. This one, pre this volume, you could see, even if you cut off that, you could see that this was going higher, right? You could see the major volume there. Same exact kind of theory here. You zoom out and you look at the whole history of the chart. You see, whoa, there's some high volume coming here. We're probably about to have a big move. Bang, 100%. All right, that's it for Sunday Bangers. I do like NVTS, but it does need a breather. So ones to look forward to on my books, Path, Poet, Lays. Again, please, these are quick movers, okay? So make sure you have your risk adjusted in that way. Make sure you're being careful. Make sure you're buying dips, not rips. You should be buying dips, selling rips, and have your risk predefined. Be very careful, and hopefully you make some money.
That was awesome. I like it. Sunday Bangers.
It's a new thing. We're doing it.
Sunday Bangers.
Sunday Bangers. That's it. All right, everybody. Well, appreciate your time. Thank you for listening. Share with a friend. Subscribe. I only see that about 10% of people who watch these are actually subscribed.
Shame.
Less than 10%. No matter what platform you're on, subscribe, like. Please give us a review. We want to build this up. We want more people to see this stuff. Unless you hate other people making money. Crazy.
Yeah. Throw some comments in the comments section too. We'd like to answer them.
I mean, anything. And the thing is, we talk to our good friend now, and it enables us to share more personal stories with everyone. So
yeah,
more people we talk to, the better.
Shout out to Yash, dude. You're gonna kill it. You got it all figured out. You're on definitely on the right path. I enjoyed so much talking with you today. Good. You can just tell, great guy, good person. Somebody I would definitely sit down and have a beer with.
Absolutely. Maybe a couple beers.
Maybe a couple. All right, everyone.
Have a great time, great night, and thank you so much for tuning in.
Have a great week in the market.